but I really want to provide to your audience the best altcoin season investment report that they've ever seen in their lives. That's my goal. And I know the hurdle is really high, and I'm sorry if I disappoint, guys, but I really want to prove to everyone that this is the biggest cycle and the biggest chance for everyone to generate generational wealth.
Today I sit down with crypto veteran and founding partner at Swissborg, Alex Faisal, as he shares the ultimate how to win at altcoin season into 2026 guide.
The four main questions that we want to answer is the alt season going to happen? Which tokens have the most alpha? How to maximize your ROI? And when do I get out?
To me, number 4 is the big question, so I'm going to watch the whole thing. We also discuss the inverse, meaning what if the entire crypto market is in a bubble about to pop? Why isn't this euphoria? Everybody's screaming, we're going so much higher. This could be the top.
Yeah.
Watch today's whole video to learn how you can earn free crypto just for the Altcoin Daily audience.
We made a custom code for Altcoin Daily.
Like the video right now and let's start.
I'm so happy to be with you again because last time was early 2023, so it's been already more than 2 years.
And Altcoin Daily has gained hundreds of thousands of new subscribers, just like I know Swissborg is killing it too. For those new folks, could you just go over your background and how you found crypto?
Yeah, absolutely. I'm one of the founding members at Swissborg. My brother is the CEO. So it's a brother affair like you guys, Austin, Aaron, Saris, and myself. And, growing up as a kid, I was never really good at inventing new things. I love to take things to the next level or innovate a little bit. But my brother always had really big, grandiose ideas. And he had the dream first of creating the first Charles Schwab in Europe and essentially to give access to stocks, to democratize stocks for people who didn't want to call up their broker, over a phone and be able to manage everything themselves. That didn't work. I think the idea was brilliant. And SwissQuote ended up doing that, one of the big fintech apps of Switzerland. And the second time around, he's like, I really want to democratize wealth management and crypto asset management. And he told me about crypto and all that kind of stuff. And I thought his idea was brilliant. And this time I was thinking, I cannot let him fail because he had such a good idea before. This time I got to give everything, my heart, my energy and time. And, now 8 years later, we're still alive. We have 300 plus employees, $2.4 billion of assets under management. So it's been a crazy ride, brother.
You're a crypto veteran. You've been in the trenches. You get some of that inside information. What is your declaratory statement today about altcoin season?
So this show means a lot to me, Austin, not just because you guys are one of the biggest channels in the world, top 1, top 2, top 3, depending on the months and years, I guess. But I really want to provide to your audience the best altcoin season investment report that they've ever seen in their lives. That's my goal. And I know the hurdle is really high, and I'm sorry if I disappoint, guys. But I really want to prove to everyone that this is the biggest cycle and the biggest chance for everyone to generate generational wealth.
Let's jump in. I know you prepared some slides. Let's go through step by step, and I will ask questions along the way.
Yes. And I'd love to tell everyone, Austin, that once again, what I am going to say is just my personal opinion. And as an individual, I think in probabilities. So I don't 100% believe in what I'm going to say, as in I believe what I'm going to say, but everything is a probability. It's like, I think that, for example, one part has 70% chances of occurring. Another part, maybe 90% chances of occurring. Another part, 51%. And for all those watching out here, obviously, like Austin and myself are positively biased crypto. So we do want to see an altcoin season. So just as a way for me to gather feedback, I love to follow people, like 3 people that are very optimistic and 3 people that are very pessimistic, so that I can look at exactly what the objections and reservations are and then draw my own conclusions. So nothing will be perfect, guys, but I believe that what I'll share today has a very high chance or high probabilities of occurring.
That's fair. And I think the audience gets that. It's a great reminder. Nothing is guaranteed. These are probabilities.
They're all probabilities. We need to see life in bets, right, Austin?
That's right.
So what's on the menu for you guys? I hope you're really hungry. And if you're thirsty, please grab yourself a drink, warm, cold, whatever suits you best. Find your nice little sofa, chair, armchair, whatever. And today we're going to talk about what I believe is called the Alt Season Bible. of 2025 and 2026. And the four main questions that we want to answer is the alt season going to happen? What are the probabilities? Which tokens have the most alpha? For those who don't know the word alpha, it's tokens that outperform the market. How to maximize your ROI, and when do I get out? I don't know, Austin, if you have any comments. Do you like the agenda and the table of contents so far?
I love the agenda, and to me, number 4 is the big question. So I'm going to watch the whole
Oh
thing.
my, oh my God. That's one of the toughest ones too. So long story short, my dear Habibis, because I'm broadcasting from Dubai, let's try to 10x your wealth. Does that sound good, guys?
I want that. I want that.
I need that and want it. So, but one thing that's very important, rather than just fixating on 10x or 20x or whatever your goal is, I think it's very important to understand how the market behaves. And so imagine this pot being the market and this beautiful beam popping up being the returns. And we can say, for example, Solana will pump 50% from here. If Solana pumps 50% from here, then probably, and I'm not guaranteeing these coins will, Avalanche could 2x relative to its potential. Maybe Aave will 3x. Maybe Camino on Solana, which is the lending market's liquidity provider on Solana, will 4x. And then maybe all of the coins, like for example, that are lower caps, could 5 to 8x to 10x. And if you're very lucky, like in Aster, recently that 19x, right? And in just a few weeks, you could really make crazy gains in crypto that you can see nowhere else in the world. And this is called, what we want to find, guys, is high alpha. So tokens that outperform the market, but also looking at the risk level. So the higher we are looking to seek gains, the higher the risk we're taking. So the 5 to 10x's, as you know, Austin, very, very well, are the micro caps. And those that pump a little bit less are the mega caps. But for people like myself who are more the middle class, we like to take more risk, because a 50% pump or a 2x from here, if Bitcoin goes to 200, 230, it's not really transformational for middle class people. So personally, I take more risk and I play with mid caps, small caps, and once in a while, of course, micro caps. And these top micro small caps are considered high beta. So everyone out there, summary, you want to find a high alpha token. It outperforms the market. And if you have the risk tolerance, high beta, which means a token that has more volatility, but more upside. And then same thing. So if those same tokens pump more, then it's all the market, right, Austin? I think that's, when everyone says, oh, we're going to 10x or 100x, it really depends on one single thing, on two things, the market and the risk factor or risk appetite. Does that make sense so far, Austin?
Mm-hmm. And for me personally, like the majority of my portfolio is Bitcoin, ETH, Solana, the high caps. And I try and go over with my audience all the time that it's about market cap, not price. And for some part of your portfolio, then you get into those small caps or mid caps, and that's higher risk, higher potential reward, which we all want.
Exactly. And I think one thing that's really important about risk, I don't know if you feel me here, Austin, but the concept of risk, the definition is volatility, which I think is a stupid way of measuring risk. And so for me, risk, guys, is the ability to take risk at the right time. So if you're following the markets and you know that the markets are risk on, and that, smaller coins, lower caps are going to pump, then the risk is not that risky anymore. Does that make sense, Austin?
Mm-hmm. Love it.
So yeah, anyways, that's just a side note. And today, Austin, to talk about the altcoin season, which I believe we're going to cross the chasm. And I think this could be the biggest bull market in the history of Web3. And our analogy, our comparison, to make everything relative, I'm taking the Web2.com bubble to compare everything, because there's so many positively correlated topics, Austin, that I find really intriguing. And .com bubbles, I just want to make sure everyone understands the meaning of a bubble. A bubble is not just a tech frenzy that goes up and then crashes. A bubble is an experiment to me, Austin, as in you try new things with tech, you experiment it, and some work and some don't work. That's just the name of the game, right? We see what sticks. And I'm very bullish, Austin, when you have renewed bubbles. So the difference between a new bubble and a renewed bubble is that a renewed bubble is a bubble that comes back with another potential use case. and that may stick. And if they stick the second time, usually that proves that the technology is important, or if that makes sense up until now, Austin. So for example, I just put here, Austin, like maybe RoboFi, I'm inventing a new word, by the way. Maybe robotics and DeFi will be a big bubble of the future. And the first iterations, although tokens may pump, I think a lot of them go to zero when there's a new asset class. But those that actually manage to renew the bubble will go to the moon, if that makes sense. Am I talking crazy here, Austin?
You're making sense. I recall, I mean, I wasn't present for this mentally, but when the Beanie Baby bubble happened, that rose never came back. Bitcoin has crashed and rose many, many times. I think just like the internet days, 99% of the projects will fail, but the internet's not going away. Crypto is obviously not going away. And these, for the first time this cycle, we're actually starting to see real product market fit as the US regulates.
Yeah, and I think that is a really good example because you're not just talking about new and renewed bubble. You're talking about something that comes back 4 or 5 markets, which is, it's solid, right? Like Bitcoin is just straight up solid. ETH is straight up solid. Solana as well. So that's a really good remark, actually. So yeah, that's about it. And so why do I believe, Austin, that we're going to make generational wealth? And I think it may be we only have maybe 1 or 2 of these opportunities as investors in an entire lifetime. And I'll explain why I believe that. It's because the biggest market rallies for stocks happen with a magical formula. And this formula has business growth. So, Raoul Pal, you mentioned him the other day, Austin, he loves to look at some factors like the PMI or the ISM, GDP, all these factors, right? So the business cycle is really, really important, of course, because businesses make more money, more revenues, more earnings, and then their valuations go up, the stock market rallies. But if you can have a business cycle plus monetary policy, so good business cycle, lower interest rates, which means higher liquidity, that's even better, right? But what is even better is what if we have 2 tech booms? Not just one, not just the .com Web 2. We're talking 2 emerging and transformational technologies coming at the same time, like a freight train. And that is absolutely mind-blowing. And that equals what I show here, generational market rallies. Because you have plus equals these 3 things equal a million, right? Because it happens very, very rarely. I mean, besides the internet, what are the major tech revolutions we've had? None, right? It's Web 2, Web 3, and AI, right? Essentially. I don't know if there are any others, but back in the days, maybe it was manufacturing, more hardware.
True. The printing press.
The printing press, yeah. The printing
That was a
press
big one.
huge.
That was a big one.
That was a big one.
Alex, I like this. This is what I believe. This is my bet on the market. It seems so obvious when you put all these things together. I think the detractors would say, we're only getting positive monetary policy because the economy's teetering on recession, depression. This tech boom's not going to play out. AI's in a bubble is a lot of headlines. That's what the detractors would say.
And I think those are really good questions. And hopefully I'll be able to answer them in the next few slides. So hopefully today, like Austin, I looked up on Grok, why are there so many Wall Street bears? What are they saying? What are their concerns? I did a lot of research on the reservations. So hopefully we answer all the reservations that your community has as well. So that's a very good question. Now, let's explain why I believe the Web2.com boom and bust is the best example for the current rally. Now, and Raoul Pal, he kind of talks about this a little bit. And by the way, Austin, I got Raoul Pal's kind of green lights before coming on the show. I was sharing these slides. So shout out to Raoul. He actually gave me feedback on my slides before coming here.
He's the man.
He's the man. I love him. So here, Web 2, essentially every tech cycle, which we saw on the previous slide, can be broken down into 3 major phases. As you guys see here on the far upper left, it's Web 2 innovation is the base layer. But then after that, what we have is the growth stage. And then we have maturity. And why do we call it maturity? Is because a lot of these companies will have to really find a new technology, or else they will be surpassed by their competitors. There's always a cycle to not just the tech, but the product cycle as well. And so here you guys can see from 95 to 2001, we had the dot-com bubble, which was the base layer. Then we had crazy growth. You remember, like Austin, the whole market crashed like insane. Many people lost a lot of money investing in shitty companies like pets.com that have nothing in particular for a website, or it wasn't like, Apple or Meta or Facebook, which was called Facebook back in the days. But then we had the growth, which is essentially the applicational layer. And then we had maturity. So the biggest IPOs in the world from the New York Stock Exchange and NASDAQ, were the two biggest stock exchanges in the world, were all from this dot-com bubble and era, right? So what are the similarities to Web3? Well, look at it. It's literally the same. In Web2, in the innovation, the first part of the dot-com bubble was the base layer. And we had in 2015 to 2018, the smart contract, which was essentially layer ones, right? So that was our base layer. It's the core layer, the data layer that is going to support applications. Then we had a 2-year gap, but we had a second bubble. And in a second bubble, that's where we had the dApps, or decentralized apps. So you see the parallel here? Like we went from applications, Web2 growth, to dApps, dApplications, Web3 growth, which is very, very similar. And then all of a sudden, remember Austin, because the first bubble, literally like there was nothing, it was just Bitcoin, Ethereum that came out of it, and ICOs. So there's no value creation. But suddenly we had real value creation. We had RWA with, stable coins. We had Aave with money markets, lending. We had liquid staking. So we started generating yields. So we started having real applications that people use more and more. And you can see DeFi TVL at the moment, it's going to reach an all-time high, the same all-time high we had in 2021. And then there's a 2 years gap. And look at this, Web3 maturity, the biggest IPOs in the world right now are Web3 companies. So how can someone say, and please, Austin, if you need to play devil's advocate, how can you say that this doesn't look similar? And one remark that I want to say, that people may say, but why are the bubbles shorter? And Raul Pal explained this really, really well. Essentially, the crypto adoption curve is much faster than Web 2. And the reason behind that is because people are already on Web 2, and Web 3 is a layer on top of Web 2. It's the decentralized trust layer of Web 2. So obviously, the adoption curve is much, much faster than what we see with Web 2. So I'll open up for you if you want to challenge me, Austin.
No, I agree. In the internet era, we didn't have the internet that was being built. In the crypto era, we have the internet as the rail, so things move faster in general. And this is interesting. I think just keep going, Alex. You're making a lot of sense.
Okay, thank you so much, brother. So the next question that we want to look at is, do you remember that slide where we had the triple three, the 3 pillars for generational wealth? Mm-hmm. I want to show this on a graph so that we can see the milestones and everything. This triple pillar created a 10-year bull run in stock markets, the longest rally in the history of finance. And that's why I'm thinking, Austin, that this could be a longer rally, and there's going to be big corrections. You can see here in this 10-year bull run, there are 3 corrections that went down 20% in terms of stocks. 20%, as you know, Austin, it's not like crypto. 20% in crypto is like, oh, that's okay, I'll just have a beer.
For sure.
But in stocks, I can tell you, people are pulling their hair out.
So you're saying,
I love,
go on.
Go ahead, buddy. No, go for
well,
it.
so are you saying that in crypto, even if we do have a 50% Bitcoin correction, that does not invalidate your thesis?
Exactly. So my thesis, if we look at the correlation between the .com recovery bull market of 10 years, is we won't see a long bear market anymore, or it's just not going to happen. We're going to see a very extended bull run, but with really big corrections along the way. So possibly Bitcoin going down 30, 40% at once, but then recovering and going back up. That's kind of my theory. And the reason why I have even more like proof, once again, in thinking of probabilities, is look at when this bull cycle started. You see the Great Recession here. So the Great Recession is very important because I think that the 2021 to 2022 phase was our Great Recession, because we had the biggest hacks, we had the most leveraged market with UST, with Celsius, with FTX falling, hundreds of billions of dollars lost in funds. And then we lost $2 trillion of market cap. So for me, like the Great Recession for the Web 2 era is what we experienced from, 2022 to, let's say, late 2023. It was just absolutely brutal how bad it was.
I can
And then you
definitely
can
see
see,
that.
right? You can see that the black swans kind of.
100% in terms of how they affected the mind share of the audience, in this case, crypto.
Yeah, and the Great Recession, Austin, as you know, the market was over leveraged, right, with subprime loans. And here's the same thing: we're over leveraged, three Arrow Capitals, all this was over leveraged, right? UST was over leveraged. So really, it really resonates to me as the same story. And you can also see here there were trade wars with US and China, which is exactly what we're seeing now. US credit rating downgraded also happened this year and happened back then. So a lot of the events look very similar. And now let's look at, we see the legend monetary policies in green, tech boom cycle is in blue. And so you can see the tech boom cycle helped extend this bull run. And you can see also that the Fed lowered interest rates. Actually, it went nearly to 0% at one point. And even though they started raising the rates, Austin, in the second half of the bull run, the rates were so low that they were only at 2%, 2.5% once they started raising them. So the bull run just extended. And the last question, so I love to ask myself here, is the business cycle, which is what Raul Pal looks at with the PMI ISM. So you can look at this business cycle. Literally, it's perfectly concluding, the stock bull run, right? Stock market bull run. So this is the formula that I believe, Austin, that we have to really find the best rallies possible. If we have the business cycle, the tech cycle, and the monetary policy, liquidity, all combined, we'll have a crazy bull run.
Almost like 200K for Bitcoin seems too small.
I think so, yeah. What is your price target for Bitcoin? Do you have one for this
I'll
rally?
tell
I
you
know
at
it's
the
a
end of
crazy
this. So
price.
once I
Okay.
download all this information, I'll tell you.
Okay. And one last thing, that for those who think that the market is over, you see the last question here at the bottom right that says euphoria stages. So it is extremely rare, once again, if we think in probabilities, guys, that you have a bull cycle without euphoria stages. As a matter of fact, there's less than a 20% chance. And it has to be hit by a huge black swan. So every market, if we look at the stages of the market, if we look at Wyckoff and all these different models, they all have euphoria in it. And do you feel like we've been through euphoria, Austin, through
Absolutely
stuff?
not. And that's why I don't believe this is the top. If we might have a 20% correction, but the trend is still up. If we
Yeah.
just finish at 120, 140 Bitcoin by the end of the year.
Yeah. I feel you 1,000,000%. And for all the reasons above, guys, you can see why I am extremely optimistic. And I know the question of like how long we go is very difficult, but instead of just thinking about how long, why not look at how high? And that's a question that I love to share with everyone. And one of the best ways to look at how high we can go, to me, is to look at total crypto market capitalization, which means Bitcoin and all the coins together. How much is the value if you add them up? And so, as you can see here, right, from 2012 all the way to 2026, this is our fourth cycle. And you can see, guys, if we look at the bubble on the top, we see 2014, the total crypto market capitalization was $15 billion. And then we corrected 77% drawdown. And in 2017, we bottomed, and then we went up 45x to reach a total of $775 billion of total crypto market capitalization. Then another correction went up 27x. And then we went to $3 trillion of total crypto market capitalization. So we can see here, Austin, that, if we look at the second bull run to the third bull run, because that's where the altcoins started coming in, we can see that, roughly we had a 5x, right? From total crypto market capitalization from 0.7 billion to 3 trillion. We had roughly a 5x, a little bit less, 4 point something. But then if we look at the total crypto market capitalization, even if we have less upside than the previous cycles, let's imagine instead of the 4 point something X, we have 3X. That would mean that if we take the total crypto market capitalization from the previous cycle, which is $3 trillion, we would go to $9 trillion, right? If we just follow the pattern. But even if we're bearish, like even if we 4 times before and we have that, and we only do a 2X, Austin, that means that we could go to $6 trillion on a conservative basis if we double the total crypto market capitalization. And there are some funds in New York that call themselves 10T, like 10 trillion, because they think we're going to reach 10 trillion. I think that's a little bit far-fetched. But, if you're a conservative, maybe Austin, if you're not sure about when the market will end, obviously euphoria stages is a very good hint and clue when you want to exit. But also I would look at how high we go. Currently, we're at what, $4.3 trillion of total crypto market capitalization, maybe 4.4 today. But we still have a lot of space until 6, 7, 8, 9. By 9, I think it's really safe to say that you better get out, take your profits. But it depends on whether you're conservative or aggressive. But yeah, does that make sense for you? Any questions, Austin?
I think this is eye-opening. To push back, devil's advocate. Why? Actually, I'm rethinking this now. Why isn't this euphoria? We just passed 100K. Everybody's screaming we're going so much higher, and altcoins are having, in my opinion, a mini altcoin season now. This could be the top.
Yeah. I think, Austin, and I'm saying this, I don't have the data. This is pure gut feeling, but I think it's PTSD and just people who really got beat up from the previous cycle. And I also think that the reason maybe we had the 3 pillars in the 10-year stock market rally is because also people were beat up from the great financial crisis. And so that it takes time to, kind of heal the wounds, if that makes sense. But it's just a pure guess, by the way.
That's so true. And like people were beat up after the 07, 08 housing crash. And I remember I wasn't in the market at that time. I was too young. But I remember seeing podcasts in just the last few years where people were saying in 2013, we didn't know if this was going to keep going. We thought, okay, now we just reached mini top. We're going back down. So there was trauma from that too. And if we saw what happened in traditional markets, crypto, it's only more bullish and faster growing. So
yep, and that's a really good example. I had people who lost a lot of money in the dot-com bubble. They were so traumatized, Austin, they never invested again in stocks. Like it's that bad for some people, right? They really get hurt badly, and it's just absolute PTSD. But yeah, it's hard to say. I wish I had the data.
For sure.
So yeah, that's I guess that can help, gives people some targets, right? Rather than just going for or is the bull cycle going to end on December 31st? By the way, I think these predictions, when someone points out on a specific day or month, it's just ridiculous. It's like how can you forecast that? It's just it's hard to believe. Now, I would love to share, Austin, and you can cut me whenever you like, to share a very high level and holistic view of crypto markets and how they've evolved until now and how I think they will evolve in the next 6 months. Is that okay?
Please.
All right. So, guys, the legend here at the top left, you see the green arrow is for things that already have occurred. And the dotted arrow is for things that are about to occur based on my personal predictions. But as you all know, the beauty of crypto, guys, is that retail was the first character of this beautiful story. Retail came in, retail got into Bitcoin and got into all these amazing assets first, from the mega caps all the way to the micro caps. So it was a retail driven market, which is, Austin, the first time in history. And I really like that retail, hopefully, is making more money than institutions. And one of the questions that a lot of KOLs, content creators, are asking and essentially saying there's no such thing as alt season is they talk about, Austin, as you know, but what's going to happen with all these millions of coins that are going to our cycle, right? And sorry for being so French here, but that is probably one of the number one contentions. No, Austin?
Yes, 100%. I see that in the comments.
Awesome.
Pump
and
fun. They're ruining it.
What?
They're taking the liquidity from real projects, is what I hear.
They're taking the liquidity from real projects. It's really hard, man. It's a tough market right now. But there is some validity to this, but I want to show to all the content creators who are using this as an excuse to not have an alt season that they're absolutely wrong, factually wrong. So 2021, there were only 4,500 tokens listed on CoinMarketCap. If we fast forward to 2025, there are 21 million tokens tracked on CoinMarketCap. So you can kind of understand that people have an issue with dilution, which means just, an inflation in the number of tokens that are being created. But the thing is, Austin, I can reassure everyone this is not a legitimate excuse because out of all these coins that are being created out of thin air, 0.00001% have a market cap of above $1 million. So that's just a market cap above 1 million. So it doesn't mean that the project's going to succeed. And we can all verify this on Dune Analytics. All the data is there. So this inflation in tokens is not an excuse for not having an alt season, is my point here, Austin.
I like it.
I like it. Awesome. So the next part of the story, we have a second character that will join us. So we talked about retail. Now we have what we call the institutional capital. So the guys from Wall Street walking down, bum, 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 ba-dum, bum. Not kidding. And here we can see that obviously they started liking Bitcoin, even though a few years before they were saying that it's rat poison squared or whatever stupid adjective. And this is what I call a super cycle, is when both retail and institutional money focuses on the same asset. It has been adopted by both sides. And so Bitcoin and Ethereum, I believe they're in their super cycle. That's just my personal definition, by the way, via ETF and funds. And here, this is an interesting chart about the ETH buy pressure. You can see, Austin, right? Like in black, you have the institutional players. Sorry, the colors are really hard to read.
I can see it.
You can see it. In
Yeah.
blue is retail. But look at how the institutional players started to come in 2021 and then dump their bags. And now all of a sudden, which is very unfortunate because even though retail were the first people to get into ETH, the institutional money is buying up all the supply. So this is just to say essentially, Austin, that don't sell when you have little bumps and a little bit of turbulence along the road. Don't get shaken out, because it's just very clear that their agenda, you can see it on chain, that they're really trying to get as much as a supply and lead the market. I don't know if this makes sense, Austin.
100%.
And so the third player of our cute little Disney story is the DATS, right? Which stands for Digital Asset Treasury. And essentially, guys, the DATS we'll look at what they're doing. They've already started with Bitcoin, Michael Saylor, which I think you've interviewed, right, Austin?
Many times. Friend of the channel.
Yeah, that's amazing. Ethereum with Tom Lee. We're going to see the examples of DATS, but I believe that DATS, they've already started, buying Solana and putting other tokens on their treasury. But long story short, guys, for those who are watching and don't know this acronym, a digital asset treasury is essentially a company that will buy tokens, that will raise money and dollar value, and they will buy those tokens off the secondary market, which will pump the price. And then they will keep those tokens on their balance sheet. And then Wall Street can get exposure to that balance sheet without having to buy crypto indirectly. Is that a good definition, Austin? Does that make sense?
Yeah.
Or?
It's like what Michael Saylor did with MicroStrategy. Buy and hold, and you can buy products off that, but he's never selling that Bitcoin. We're seeing with Tom Lee and Ethereum and Solana and others.
And what Austin is saying, guys, is exactly what we're going to show you here. You can see that it was very beneficial for Bitcoin and the stock price. That's the beauty of these DATs, right, Austin? It pumps the stock and the price of the token. So it's a double combo right there. And you can see that Tom Lee has done the same. So 500,000 Bitcoin has already been purchased by MicroStrategy, which is insane. And then Bitmine with Ethereum, right? So their stock pumped 12x, Austin. And while they're pumping their stock, they also pumped ETH 40%. So this is beautiful. Like, you got to love the DATs, right? What do you think, Austin, about this model?
I think that it is amazing. And Michael Saylor is thinking decades down the line. Tom Lee, I have nuanced opinions. I think it's great in general. I think for these DATs, you need a charismatic leader. So I like these two. And this is some may say this doesn't matter at all, but I think you need a charismatic leader to lead you through even through the dips.
You're absolutely right. You're absolutely right. And that's very, very well said. Because you're right. It's not just buy pressure. They hold it on the treasury. So they're removing the tokens from the supply. So they're also decreasing sell pressure, is what you're saying, Austin.
Mm-hmm.
Yeah, that's a really good thought. I hadn't thought about that because you're right. Micro strategy. I mean, Michael Saylor just hodls. And so ideally, Austin, even though we have huge wounds, we've lost an arm, we've lost a few legs, maybe 1 year. But let's hope that new retail comes back. New retail is the ideal next step of this cycle. And we create some sort of bubble or renewed bubbles, as we talked about earlier, and they start FOMOing into all of the assets. And that would, I think, really, it's when we start reaching euphoria that the new retail comes in. And, you have Austin, your favorite Uber driver, who's asking you if he should buy, Bonk or or Pepe or
I'll definitely sell this time when that happens.
yeah, me too. There you go. That was a story of what happened in the past and what I think will happen in the future. And this is a even more important part because we want to look at finding alpha tokens, right? What are the tokens that have outperformed Bitcoin in the year on year? So just for everyone to know, this data is September 1st, 24 to September 4th, 25. The problem with CoinMarketCap, CoinGecko, and all these websites, they only show you 3-month horizons, which is not enough because you can have pump and dumps. So it's really important that we take 1 year for this data to really know what are the tokens that pumped and sustained the pump. And we'll look at the tokens that outperform Bitcoin. One thing that you know this very well, Austin, you probably can explain this better than me, but Bitcoin dominance is also a huge factor. So we talked about the cycle, the euphoria. That's also a hint of, you need to take your profits. How high we go, total crypto market capitalization is also important to when we take profits. But also the alt season blueprint, which essentially the dominance of Bitcoin relative to all the other coins inverts. So Bitcoin goes from 60% dominance of the total market capitalization and then goes down to 40%. And how the way that happens, it's usually gradual, right, Austin? It's like Ethereum outperforms Bitcoin, and then Ethereum and maybe BNB outperforms Bitcoin, and then the top 10 outperform Bitcoin, and then the top 20, and it just goes all the way down, right, Austin?
Mm-hmm.
I don't know if you have any comments or.
I think big believer in Bitcoin dominance in 2022, 2023, when crypto was going up, Bitcoin dominance was still high. So that means people were finding more belief in Bitcoin. Now Bitcoin has risen to over 100K. Can I get the same returns? Bitcoin's maybe only at 2.25x. What other altcoins will give me better exposure? That's typically the mindset of these investors.
Yep, absolutely. Beautifully said.
And risk off macro and risk on macro.
Absolutely. And so what are the top performing tokens 2024, 2025? Here we go, guys. So the first one was virtuals, which 20x'd year on year. The second, which is an AI play. It's essentially AI agents. The second best performing token was Hype token from Hyperliquid, 7x. It's a perps dex. And then we had some great performers, Sui and Deepbook, which is the dex of Sui. They perform extremely well. So we have DeFi and a blockchain. And then we had Curve and Athena Labs. I think Arthur Hayes is a huge proponent of Athena Labs. 3x, 2.5x, both DeFi. And then we had Swissborg, which is my company, that 2.5x has outperformed Bitcoin as well year on year. You have Aave that is 2x DeFi as well, and Radium, which is a Solana DEX. Now, what is the conclusion of this? Well, DeFi is the best sector to invest in, as easy as that, because 80% of these tokens are DeFi related. And for those reasons, that's the lesson that you can learn. And I think there's still a lot of alpha, right, in DeFi, Austin. When you look at tokens like Cake or some of these dexes that have retraced big time, right, relative to the previous cycle, I think there's some upside. What do you think about DeFi as an asset class, Austin?
I am bullish. I think especially with the regulation of the Genius Act stablecoins, what do these institutions, now that they're allowed stablecoins, what do they want? They want yield. And that goes right into those blue chip DeFi projects.
Yeah. I think Jido, by the way, on Solana is undervalued as well. You're right. Lido, a lot of the liquid staking protocols. So There are a few notable mentions. So these guys didn't perform year on year, but they had crazy pumps, Austin. So I just wanted to add them. Aerodrome, which is the DEX on base. Everyone may know they have a V33 model in their tokenomics, which is cool because it offsets selling pressure for people who just farm tokens and then dump and then go to the next DEX and farm and then dump. So they have better tokenomics. OKB, which did a crazy buyback burn, they 4x their token, and Aster recently 18x. Did you get on? Did you get in on that, Austin? The 18x in just a few weeks.
I didn't, and I felt like I was chasing it, so I just watched and commentated.
I missed it as well. And I had someone internally on Slack message and say, "Hey guys, this is competitor to Hyperliquid. It has a great narrative, buy some just for fun." And I didn't listen. I was an idiot. My brother actually told me to.
You can't get all the pumps, although I wish I got that one.
I wish I got that one too. And so long story short, out of DeFi, this is very interesting, Austin, because actually more than 60% of all these tokens are exchange tokens. But when you think about it, it's very obvious. Why? Because exchanges make the most money and they have the most revenues. And we're going to find out the next reason why exchange tokens. And this has been since 2018, by the way, Austin, because I do this yearly. What are the best performing tokens? And exchange tokens are always in the top 10.
Well, that
And
makes
then you have
sense to me.
RWA, right? Makes
That makes
sense?
sense to me because if there's one thing that's product market fit, it's crypto. It's for lack of a better word, the altcoin casino. People want
Yes.
to speculate, and exchanges
Yes.
are the use case for crypto as we find the real, the other real use cases along with it. So those are the rails. That's the plumbing.
That's the plumbing, and that's exactly word for word what I believe. It's because it's the speculation, phenomenon, and that's why they generate the most revenues. You're absolutely right, speculation. So here's one thing that's interesting. I just took stocks as well. In case, do you have some of your community members that invest in stocks as well,
Hell
Austin?
yeah.
Okay. Okay, great. Well, here, guys, if you want to see year on year, same thing, September 1st, 24, September 1st, 25. Here are the best performing stocks. And it's very important actually to look at these stocks because, we're looking about will the bull cycle alt season come? And a lot of people believe, Austin, that if the stock market crashes, because there's some positive correlation with risky assets, right? Stocks considered risky assets, crypto even riskier. So some people are worried about not having an alt season because there's going to be a blow off top in the stock market. And I want to show that this is absolute BS as a objection or reservation. But anyways, here 6.5x for Rocket Lab, which is a rocket manufacturing company. And then you have a lot of energy companies, Austin. Then you have one gaming company, Roblox. I have a daughter. She plays this game. I don't know why this is so popular. It's so boring. This new generation, man. I'm such a boomer.
Crazy.
Then we have an infrastructure company, Comfort Systems. What is very interesting here as a whole is AI is the best performing sector in stocks. It's the AI stocks are really driving the entire market. And why I'm saying this is because these energy companies you see here on the left are all for powering AI data centers. And the infrastructure company is also infrastructure for AI. So essentially, when you look at the bottom, NVIDIA, which is the best performing stock of all time, Google, Meta, it's all AI, Austin. It's almost 100% AI bull run. And these AI companies are generating real revenues. So it really feels like the dot-com recovery cycle, not the dot-com bubble, not the bust. So this is one thing, and there's going to be an even better correlation right here. Now, everything's going to connect for you guys. Everything's going to click. Watching out there. Now, let's have a look at the biggest token buybacks, once again, year on year. Virtual's $40 million. Hyperliquid, 97% of their revenues, $600 million of buybacks annually, which is absolutely insane. By the way, Austin, Hyperliquid is the most efficiently run company in the history of the world. There are 12 foundation members, and they're generating more revenues than any company in terms of revenues per employee in the history of companies, which is crazy. And then you have 50 fees generated from Jupiter is doing buybacks, so roughly $19 million a year, or $3.1 to $3.3 million a month. Aave doing $1 million buybacks, et cetera, et cetera. So you guys can see here, we have a list of token buybacks, right? And here is when the correlation becomes very interesting, Austin. Look at the best token performers and the top buybacks, and look at this beautiful positive correlation. Now, essentially, almost every single one of these tokens is doing buybacks in the top performers. And the two outliers that are not in there is Jupiter 1 and Maple Finance, which is 2. Maple Finance is just because 20% of fees does not suffice to pump their token. They can keep maybe a stable price. They can support, on a defensive side when people are selling, but 20% usually is not enough to really pump a token unless you generate crazy revenues. And why didn't Jupiter pump? Now, this is something, it's basic math, Austin, but it's funny how sometimes you have to do research to make really simple conclusions. And it's very simple. So if you have $20 million that are buying the token, but you have an airdrop called Jupiter that is emitting $53 million of tokens, do the math. 20 minus 53. Does that sound like a net positive to you, Austin?
It doesn't.
And do you think many of those airdrop people are hodling or just dumping that shit?
No way. You get it for free. You're often taking profits.
Exactly. So it's very simple, guys. And we'll talk about what are the formulas to success. And this is even more mind-blowing, Austin. And this is going to really back my theory that, the stock market is not going through a blow off top, and that stocks are not overvalued and we're not going to have a crash. Because look at this beautiful positive correlation in the Web2 world. Every freaking stock in this page of the top performers is doing buybacks, except Apple. And Apple, which had $100 billion of buybacks year on year. The only reason why Apple didn't perform, Austin, was that Wall Street thought that Apple and Tim Cook was doing too many buybacks. So it's crazy. And this may sound crazy, but the theory of Wall Street is essentially saying Apple, rather than investing in AI and in technology that's going to change the future, they haven't been innovating much, and they're investing more in their stock to make their shareholders happier while not thinking about a more longer-term sustainable approach. So Wall Street was a little bit bearish, as crazy as that may sound. But my point here, Austin, is that even though we've reached all-time highs with the New York Stock Exchange, with the NASDAQ, with the Russell 3000, my point here is that the majority of this rally, first of all, it's number one, it's tech-driven, it's AI. So it's not the whole cycle or market rallying. It's really the AI companies. That's number one. So it's a tech boom. And number two, they're rallying because they're buying back their stocks, not just because institutions are buying them or because retail are pushing the price. Obviously, retail are also pushing, but institutions, most of them have very little exposure to stocks. And it's been so for the last year. And I know because my aunt works at JP Morgan and I have friends all over, and ask them, what is your ratio in stocks relative to the bond market, relative to cash, to gold? And it's all very low. So do I sound crazy, Austin? Do I sound like Doc in Back to the Future right now?
Hey, nobody more sane than Doc Brown.
Yeah.
But question for you. Couldn't you make the argument that with crypto, the buybacks based on revenue, they're leading indicators, because how much revenue and users and fundamentals you have that directly correlates to the buybacks, it's happening automatically. With the stock market, couldn't that be a trailing indicator? That's why they're making sure prices are good here, but that's already happened.
Yes.
There's no guarantee they'll keep buying back.
That's a very good question. And actually, you front run me on the slides. So I'll wait until we get to the slide, but that's a very good question, because I knew you would ask that question. But that is a very, very good question. So long story short, one last thing, Austin, that the reason why people think that the stock market is overvalued is because of something called a PE ratio. And so for those who don't know what a PE ratio is, I think most people know, right? It's the price of a stock relative to the earnings, right? And so when you find that P ratio, it will tell you roughly if a stock is potentially overvalued or undervalued. So for instance, today we have a P ratio of 28. That means that some stocks on average trade at 28 times the multiplier of its net earnings, right? But look at the dot-com bubble. The P ratio was 46.5, Austin. So it was double the P ratio of today. And look at the dot-com recovery cycle, so the real cycle where the FANG stocks and the Magnificent Seven all started appearing. the P ratio was 15 times higher than the one today. So don't tell me, oh, the stock is going to blow off top because of the P ratio. It's not even relatively close to the biggest bull runs of the past 2 decades, is my point here, Austin, if that makes sense.
Makes sense. And there's more money in the system now, and there was way less
And there's
money in the
more money
system.
in the system now. Absolutely. Absolutely. So I don't buy the P ratio BS. And now the answer to your question. Actually, if I can go back just very quickly, what you said about the buybacks, if I understood your question, you're trying to say, aren't the buybacks giving some sort of reassurance to the investor to buy more or not to sell? Is that what you were trying to
I'm
say
saying
in your
that
question?
the crypto buybacks are a
Yeah.
leading indicator because they're
Yes.
programmatic. The
Yeah.
buybacks for the stock market, they're a trailing indicator because there's no guarantee they'll happen again, and that's the reason the prices have gotten to where they are in the immediate last short term. No guarantee of the future.
Yes, exactly. And the no guarantee of the future is a very important part because the stocks like Nvidia that are pumping really well, if you can look at the Nvidia right next to that silver arrow, it's the third stock. They did $50 billion in buybacks in 2024, but they also, Austin, announced $60 billion in buybacks already budgeted in 2026. So
Mm.
how would you feel, Austin, as an investor, if you're like, wait a minute, they're going to continue to buy even more next year, or it probably makes you feel good, right?
Yes, I'd feel FOMO.
You feel FOMO. And that's a key part to the strategy of buyback. And for everyone out there who maybe you've identified a project that is generating revenues, which they allocate a percentage to buybacks, it's very important that they focus on maximizing buy pressure, minimizing sell pressure. And I really like, if you guys can look on the right under the green square, strong buyback power. So strong buyback power, generally speaking, 50% of all fees, going into something has proven to be very robust, depending on how many revenues they make. Sustainable buyback power is what you just asked me about, Austin, which is saying like, is it a one-off, like a marketing coup? So you sound cool and you pump your token, then it dumps right out, right after, or is it a allocated budget for a year, or like Nvidia saying, guess what? Next year we're going to buy even more, of our own stock. And then scalable buyback, ideally. So for companies like Swissborg, for instance, we want to add more and more products that can essentially fuel the buybacks to pump the token, not just strongly, sustainably, but also scalably. And then all of the other things that I want everybody to look at as well is like Jupiter has cool buybacks, but if you look on the left-hand side, the second component, low token emission, essentially, Austin, is like high FDV, low float tokens. You have to be very careful when you see a token with a high FDV and low market cap, because that probably means that they are going to emit and print or more tokens on the secondary market.
That's
And for
silent
those reasons,
inflation.
silent inflation. Yes, Austin. So one thing that's very important, guys, is when I saw some buybacks, I'm like, oh wow, I'm going to buy this token. I'm going to make a lot of money, and then I would get wrecked, and I'm like, what the hell's going on? And then a friend would tell me, did you see all the VC unlocks? Did you see all the tokens emitted or the airdrop? I'm like, no, I just saw the airdrop news and FOMO like an idiot. So yeah, you probably understand what I'm saying, Austin.
We've all been there.
And then one thing that's really important is high percentage of supply of tokens locked. That's very good because that offsets sell pressure. And then high decentralization, many people hodling the token, not just whales. So for example, Hyperliquid, the Hype token, has a huge amount of whales, which is a little bit scary. But because they have 97% of their revenues buying them back, it should be fine. And then one special component you can see at the bottom, low liquidity, high price impact. This is what we did with Swissborg, Austin. You probably saw like on the weekly charts, we're the best performing token in the top 300 by market cap. So what I'm saying is not just research. We've applied it to our own token and it's worked. And we can maybe talk about that later. But we did something crazy, super unorthodox, Austin, which is we delisted from all the sexes. So we went the opposite route from everyone else who FOMOs and pays a shitload of money and gives a percentage of supply and get ripped off by these sexes. Which, by the way,
Usually,
to get yeah, go for it, bro.
usually altcoin projects want to get listed on sexes because that's more plumbing, that's more avenues to buy. You said, no, get us off the centralized exchanges.
Yes, get us off these scammers. Like, not all scammers, but a lot of them are. Because what happens, Austin, is you lose control of your token holders. Number one, you lose transaction volume for other exchanges. Number two, and on top of that, their market makers will market make the shit out of your token. So they'll make it a stable coin, because you'll be battling against them the whole time. So we realized that we don't want to do that, and there are many other reasons on why we delisted from all the sexes. I mean, DEX spot volume, as you know, Austin, is already nearly 30% of all traded volume, and within 5 years, sexes with private order books will become irrelevant, in my humble opinion.
That's true.
So yeah,
It's a new time in crypto. DEXs are on the rise. They're prevalent. Now's the time to be DEX.
yeah. And I think people will all agree, like, you want one aggregated liquidity layer, right? Where you can just get all the liquidity to get the best pricing eventually, right? You don't want it to be in a private order book where you can't see what's going on and the wash trading and all that kind of stuff, in my humble opinion. But and so one little framework that I want to share, in addition to buybacks, Austin, for everyone choosing tokens, this is a very simple quadruple quadrant, that I think can really summarize your token strategy when you're investing. And I'll go through each four of these boxes. And on the legend side, we have what the community can do, and then, for example, what the company can do to help token price action. So in this case, Swissborg is my company. And here, this is how we look at it. Essentially, the first upper left quadrant is what we call here value via utilities, or perceived value from the investor standpoint. So the guy's thinking, I will trade $100 of my money in exchange for this token because I think I can get value that can surpass the $100 that I'm paying, maybe $101, $110, right? The second quadrant is locking via loyalty via locking. So not only I buy the token, but because I trust it, I'm going to lock it up, on bigger time frames. And that demonstrates loyalty. The third component and quadrant on the bottom left square is the buybacks that we just talked about, and how to have an effective buyback. And last but not least is how to minimize sell pressure, is to burn your supply and create scarcity, right? It's a very simple model, Austin, but I noticed that, and we'll look at it on the next slide to have some very clear examples. But if you have a token that can really fit all four of these quadrants, it's usually a moonshot.
I agree. Listen, I've heard the same thing come from Arthur Hayes saying if your token is not, we're tired of projects that have great fundamentals, but the token price just keeps going down. If your project doesn't have some sort of buyback programmable mechanism, then we don't want it. That's Arthur Hayes' opinion. And I get that because I agree with that. Do you think like that L1s should also integrate some of these buybacks like Cardano, Solana?
Yes, absolutely. I think that's a really good point, and your questions are so good because that's exactly what I had on this slide. And long story short, Austin, if we go back to this framework, like most of the L1s are going to have quadrant 1 and 2. That's it. So the L1s will have something people will buy, and then they'll lock for some yield. But the problem, Austin, is the yield coming from the L1s is because they have inflationary supply. They just keep printing new tokens. And as you know, Ethereum tried to have a deflationary supply when they made the announcement. I believe it was Jan 24 or Q1 24 or 23, forgot, but they failed to do so. You remember, Austin? Like, I forgot the name of the upgrade. They always have these funny names, like a Dutch name and then a Japanese name,
Right.
and they promised deflationary supply, and that didn't work. It's inflationary again.
But that is coming if there's enough activity on the network.
I hope so. Yeah, exactly. Yeah. Exactly. So if they have a lot of activity on the network and they're generating enough fees eventually one day, that would be amazing if they can pay out 3, 4, 5% true, just solely based on trading activity or just transactional activity, right? That would be very cool because all of a sudden you don't have an inflationary supply.
True.
Yeah, but that was a great question. And that's why I put the example of layer ones. So most of them have transaction fee, gas fees, staking yields, governance, but in red, you can see here, Austin, inflationary supply for every single layer one, because they haven't managed yet to have it self-sufficient with the current total supply. And then you can see here, Austin, I'm very bullish, SEX, DEX, or like Swissborg, MEX type tokens. I think these guys, especially if you have perps, you can really send your token to the moon, like Hyperliquid, like Aster. And then AI have some cool like quadrant one utilities, like virtuals. Although I'm very bearish virtuals now because their revenues have dropped a lot. I don't think it's going to go anywhere unless they come up with something cool. But originally, you could buy AI agents with their own tokens, and then you would have to service them with the virtuals tokens to keep your AI agent running. So some cool, liquidity provisioning and create your own AI type thing, launch a token. So I thought that was cool utility. But look, here are the tokens, how I would like to put them. So you see BNB has the craziest burns in the industry. Pum.fun, the token has absolutely no fucking utility. I looked, it doesn't even have governance, Austin. That's how bad the Pump.fun token is. It only has buybacks. And they didn't even do an airdrop, by the way, which was a really nasty move for all those who are using the DEX. But they're still at a $7 billion valuation and just via buybacks, Austin, just via buybacks. So that just shows, the token has zero utility, not even governance, but just with buybacks, they're at a $7 billion val. That just shows the power. And then Swissborg, so we're focusing on all four of these quadrants. So I'm very bullish, obviously. And Solana, as we talked about earlier, they're more on 1 and 2. Pancake, you use it more for receiving airdrops. So there's no buyback, there's no burn. Aave is somewhere in between 1 and 2 quadrant. And yeah, this gives you an example, I guess. Austin, I don't know if you have any questions. It's not perfectly made, but it can give people an idea of the different strengths of tokens. And ideally, they're in the center somewhere.
So you think Hyperliquid will continue to go up?
I think Hyperliquid could reach $100, beyond $100, right? Because if there is a euphoria, like imagine the trading volume go up. And I say this for all exchange tokens, right? MEX, SEX, DEX. When euphoria comes, their trading volume goes up, right? And when their trading volume goes up, they generate more revenues. And this comes, I can tell you, Austin, like the difference between a bull run and a normal year. So let's say Swissborg makes $50 million in net revenues a year. In a bull run, we make over 120, 130, maybe $140 million a year. So you at least double, if not triple, your revenues. So imagine that happens to Hyperliquid. I mean, imagine we go through euphoria and they're doubling, tripling their trading volume. I think the buyback could send it over $100, as long as there's no perp stacks that has more adoption, of course.
Now the audience knows I'm an investor, a holder of Borg, big fan of Swissborg. You guys have been on the channel since 2023. Do you think Swissborg will ever surpass Hyperliquid? Is it a better Hyperliquid?
That's a very good question. Now, I want to show you something that can really answer all of the audience's questions. You remember when I said low liquidity price impact in the previous slide for the best way to do your buybacks? Do you remember that slide? That slide was, I want to show it to you in real life how this works. So this slide, by the way, I made this slide maybe 3 weeks ago, and Swissborg's FDV is already double what it is on this slide. So you can see here we're $250 million. We're already at a $600 million FDV, which shows you, Austin, that what I'm telling to your wonderful audience today is not BS. I put it into practice in our own token, this exact formula, and you can see how everyone's reacting, right? The price has rallied, the best performing token, top 300 by market cap last week. So, and why did this happen? Well, first of all, our valuation relative to all the other tokens is like, you're talking about the difference between, a star and Jupiter, the planet itself. So you can see BNB is at $100 billion val. We were at $250 million val. Actually, I actually scaled this for people to see the difference. Look at the difference in size here on the FDV side. Look, this is Swissborg, and this is the real difference.
Wow. I feel like I'm looking at the difference between Earth's moon and the planets.
Yeah, exactly. I mean, so BitGet is at a 20x from us, and definitely don't have a better system than we do. And then Crypto.com, who's our main competitor in Europe, is at 170x difference. So, and I'm not. By the way, I'm never saying that we're going to do 170x, guys. So, just want to make that super clear.
But
But
BitGet does have more users. Like
yeah,
Crypto.com, I assume has more users. So I guess that again plays into Borg just earlier in the process.
yeah. But I think like Crypto.com, I like to measure by user relative to the number of assets. So the FDV, the no, sorry, the AUM, sorry, assets under management. So, for example, BitGet has 100 million users. We have 1 million. So they have 100 times the number of users, but their assets under management are at 5 billion and we're at 2.4 billion. So they're
Really?
just two times. Yeah.
Wow.
Yeah. So we have it's a small community, but it's the most amazing community. They're absolute, they drive me every single day. I would have burnt out. I would have been hospitalized, Austin, if I didn't have this community, because they lift you up, and you probably feel the same, right, with your community.
100%.
And so yeah, I like to look at exchanges in terms of the revenues they've generated, and they're for sure like BitGet hasn't generated 10x our revenues, even though they have perps. But long story short, I would say here these are very important metrics to look at. You can see here, Austin, we're forecasting at least $20 million in buybacks. And when we're such a small token on an annual basis, that's a lot of pressure. That's a lot of buyback pressure. And we'll look at this in real time to show people like the pressure that would actually give us. But that's very, very powerful. And then you look at the buyback percentage relative to fees. So we're putting 50% of our revenues in buyback, which is very scary, Austin, for a CFO or people in accounting. They're like, what? We're removing half of our revenues to go into buying back the token. What if it doesn't work? And it took a long time to convince, all the treasury team. But we showed them that this is the way to go, and it's proving to be right. Duration. So we've been doing buybacks for 5 years now. But before we were doing like 10%, 12%, sometimes in good months, 15%. So we never really did 50% of our revenues in buybacks. And we also had a smaller user base. So we're very excited about the next part. Circuiting supply, all of it is there. There's no token being emitted, Austin. There's no airdrop that will screw us like it screwed Jupiter. And the beauty here is 40% of our tokens roughly are already locked. So 40% are being used in our premium rank system. So that's removed from secondary markets. We have 160,000 token holders. And by the end of the year, we forecast over 210 to 220,000 token holders with our new buyback system. And the team tokens, which is very important because teams can dump on you as well. Like Litecoin back in the day with Charlie Lee. And I was so disappointed when he dumped his Litecoin because I really believed in the silver narrative and it really hurt my feelings. So, but we only have 12%, and that includes the team and the company. So once again, all these metrics, why are they important? All in all, I'll show you guys what this means. Here, essentially, sorry, I'll go through this. Here you can see up until duration is all to maximize buy pressure on the token. And under this is to minimize sell pressure. And this literally, Austin, I think is the perfect table to really understanding what are the pumpamentals for a token to fly. And
Now,
so I hope I answered your question, but yeah.
now you could have gone 75% buybacks. If Hype's doing 97, you don't want to go 75?
Hype, they have an unfair advantage, which is they're not regulated. So they don't have all the compliance officers. We're licensed in Estonia under the FIU. We're licensed in France under the PESAN, under the MF. So unfortunately, compliance costs a lot.
Well, I mean, honestly, I feel safer in something compliant. So there's a
Yeah.
trade-off.
I think the Hyperliquid Foundation, they can't really show their faces, right? Because, yeah, you never know with regulators, right? It's been you guys support XRP, right? Ripple's been through hell in the US.
Mm-hmm. So you think,
Scapegoating.
so be real with me. Will Swissborg ever surpass Hyperliquid since it's checking more boxes?
I think we need to launch a perps dex. If we launched a perps dex, I think we could do that. I think we could do that
Any
because,
plans in the next year?
so in order to get the perps dex, you need a MiFID II license. And to me, that is my number one, Christmas, my number one Christmas wish list. I told the guys, hey, if we can add perps dex, a perps exchange, then I think really we'll reach, top 20 in the space. Will it happen right away? No, because we still have, in Europe, we have the MiCA and all these different types of regulatory hurdles that we're going through now. And so, but hopefully soon, Austin, it would be a great dream to be higher than them. I think they're at a $50 billion valuation. That would be crazy.
And Swissborg has been through many bull markets, many bear markets. So this is not just a one cycle thing for you. Obviously, Swissborg is a long-term thing.
It's a long-term thing. We did our ICO in 2017. We have 300 employees. Once again, that's why we can't afford to do more than 50% in buybacks. But we've been around the block, man. I'm 45 years old. We're not kids, right? We take our responsibility very seriously. The very first ICO investor was KYC. We already had AML in place, which was, in some ways, we tried to be the good kid in the classroom, but it actually slowed us down so much. If we went the unregulated route to start with, and then just make a lot of money and then pay for the fines to the regulators, that's usually the smarter way. So it's not good to be too. I can't say it's not good, but you know what I mean, right?
For you guys played by the rules from the start, and the other people did just get to pay a fine and move up. But you guys played by the rules from the start, which is important. Is there any more slides that we haven't seen yet?
One that's really important is, so you see this bottom here, liquidity to price impact.
Mm-hmm.
So I want to show you guys. This is what was happening before the actual buyback went live. So you could see that with $350,000, Austin, you could move this Borg token price by 46%. It's no longer the case today, right? Because we've more than doubled and the volume is much higher. But I just want to show you in real time, Austin, how powerful the Swissborg buyback is going to be, because we will have roughly $400,000 to $450,000 of weekly buybacks. And by the way, and although Celsius was a scam in the end, they did have really good tokenomics, right? They were buying back their token until they reached top 50, and then they didn't know how to manage the yields. They put too much of their yields in USD, and they just had the DPEG risk. But the tokenomics were actually solid for that project. But I want to show you this here, right? So this is live, Austin. So I'm not lying. I'm not selling anything per se. But if we look at Borg token on Jupiter and we put, let's say, we have roughly $450,000, right, of weekly buybacks. Here it should show us the impact. It's stalling a little bit. Hold on. Let's do this again.
This is live, folks.
Yeah, it's live, so the tech has to work. Oh, sorry, it's sold. That's why it's not moving. Okay. So let's choose Borg. So $200,000 of Borg with USDC. Let's put 250 to it again. We moved the price by 5.6%, Austin. This is $250,000. Now think about doing $450,000 every single week, Austin. Okay. So that's why it's all math. We would move the price by 9%, Austin. In every single week, we can move the price by 9%. And that's why I'm super confident about Borg. I think we're going to go to $3 in this cycle. Hopefully, if we don't have any black swans. But, one thing to look at here, which I want to share my screen real quick so you can see here. One thing that's very, very important is that what if people start selling the Borg, right? So we're buying back, every week we can, at this pace, we push the price up by 9%. But here's the beauty of this system. Essentially, Austin, if we buy back and we give the Borg, which is step number one, right? They get a Borg cashback, which is locked for 2 weeks. So we always keep 2 weeks ahead of time so that
what is locked? That goes back to the users and it's locked?
Yeah. So for the users that trade, essentially.
Oh, you're paid to trade.
Yeah, paid to trade. Exactly. This is a system that we've created, which I believe is a better model than any SEX or DEX out there. The discounted fees one is limited. and the DEX, rev sharing or LPing is also limited. But imagine this, like, so for example, let's look at the worst case scenario, Austin, which you always need to look at the risks, right, of every strategy. So we do $450,000 of buybacks. We distribute that to all the people who are trading and generating revenues. And imagine 50% sell that. So let's say the price goes up 10%, but then it goes down to 5%, right? But still you're upwards, right? But the beauty of this model is even if they sell the Borg, which is step number 2, if we go to step number 3, that boosts our app revenues because we have 80% of supply in our app. So you see why we wanted to delist from the other exchanges, Austin? This is the genius. This is the genius of delisting. It's not only you control the supply, but you will generate the revenues because we're not available on any other exchange. So you generate app revenues with the sell pressure, and that boosts the buyback. So it becomes an infinity loop. And that's what I think is the ultimate strategy. And if I may show one last slide, the paid to trade strategy is what I believe is the most innovative strategy across any exchange token. And I'll show you guys in 30 seconds why. Now, right now, do you agree? Like the BNB model is a discounted fees model, right? So you buy BNB and then you trade and then you get a discount and you pay in BNB, right? And then you kind of like buy back a little yourself to always have some BNB in your account. This is a great model for not selling, but it's not a good model for pumping. And I'll show you here paid to trade. If Binance had used paid to trade with their BNB holders would have bought BNB. They would have traded. They would have received the cash back in BNB instead of just a dollar fee. And that would have created a profit over time. So if someone, let's say Austin, he spent $100 in fees, he gets $25 back, right? Let's imagine 25%. But with paid to trade, if he got that $25 in BNB and he hodled since like 21, 22, because he believed in the project, he could actually be paid to trade. As you can see here, from $100 fees, he would have profited $600. So you would have 6x your money if while you're trading during the bear cycle, of 2022 or 3, and you hodled your BNB and you sold them at the current rates.
Because the current exchange system, the BNB example, you get essentially paid back in USD, or you're saving USD. With the paid to trade, you're saving in the native token. And if you're on the exchange, if you're bullish on the native token, one's giving you USD savings, one's giving you that native token.
Isn't that a genius system, Austin?
Yeah, I like it.
Do you see how the system itself that will systematize all the model for the users then is actually pumping the Borg, and it creates this crazy compounding effect because the Borg is so undervalued relative to its upside. So people eventually, not at all times. So the worst case scenario here, and we have to be very transparent, if the Borg token stays at the same price, depending on your tier, you will get back 90% in cash back. Okay, let's just imagine today we're at 60 cents. It stays at 60 cents and you sell at 60 cents, Austin. Then you can get, depending on your tier, 90% back of your money. But if you're getting Borg at 60 cents and by next month we're at $1, then you're getting paid to trade, Austin. You're no longer in the cashback model. You're in a paid to trade model. And that's never been done in the history of finance. And sorry, I'm going to toot my own horn, but I'm very proud of this system because I think it's going to do extremely well. And the community is very proud as well. Like the bull run that we've had so far is literally this rank system because people want more cash back. So they're locking more and more Borg. And we have a very healthy combination so far. So one thing I must say that even though paid to trade is better than the SEX index model, if the opposite, right? Let's say we're going down into a bear market and Borg goes down in price in the bear market, then obviously you're not going to be paid to trade, right? You're losing off your cashback percentage. So rather than getting 90% cashback, you're going to get 50% cashback or 40%. So from a transition from a bull to a bear, it's not the greatest model, but in any other cycle, paid to trade is better than the SEX index model.
Well,
even V33.
Just like YouTube channels, we're going to gain the most subscribers in a raging bull market. Really, I think in that year, or let's say that 3 months, we maybe gain more subscribers than the last 2 years if it's a bull bear cycle. Same with exchanges. So this is tailor-made to onboard people in a bull market, is my takeaway.
That's That's exactly it. It's tailor made. It's tailor made to onboard people in a bull market. And once again, I really think, Austin, we have the ultimate strategy for the token and the system itself. So cross fingers, and
So
hopefully today's information. Did I answer all the questions? Do you feel bullish, Austin, from a scale from 1 to 10? 1 being a little bullish or not bullish, sorry, and 10 being really bullish. How do you feel?
I want to say I was already at a solid 8. Now I'm at a 9.8. So yes,
Yes.
this answered
Yes.
questions for me.
Yes.
Flip
That's
the camera
amazing.
just back on us, if you would.
Okay, yeah, sure.
I have a question. In this sounds to me, this system, the buybacks, the pay to trade, but really the 50% buybacks, it sounds like in a raging bull market, it could get dangerous in a euphoric way because of just the circular effect of this. Do you see that, like this getting so out of control to the bullish, a system like this?
I really think so. Like my initial price forecast for the Borg token was $3. And the reason why I say that, Austin, is because if we just follow the trend and we're amongst the alpha tokens, and you remember the total crypto market capitalization where we double the previous cycle total market capitalization, all of the exchange tokens, Austin, have already doubled or tripled their previous market cap from 2021, 2022. We were slow, Austin, unfortunately, because we didn't understand the buyback mechanism as well as we do today. But now we understand it, and we have a system that I think is better than most. And so, as you said, right, like if our trading volume goes up 10x, we're not going to be buying back 400 or $500,000 weekly. We're going to be buying back $2 to $3 million weekly, because in the previous cycle, our best day, in when we were peak euphoria, we earned nearly $900,000 in fees in one day. So that, what we're doing weekly and euphoria stages, we would do that daily. So imagine the buyback pressure there, Austin. It would be absolutely nuts. But the downside is what's going to happen, when people, if we manage to surpass the $3 mark, which is double our all-time high $1.5 the previous cycle, which I think we should hit pretty easily. How do we protect the downside? And so we have many strategies for that, where we're going to add more and more Borg token liquidity in the liquidity pools to offset the sell pressure, have DCA to, kind of have a more defensive strategy, right? To not lose everything in the next bear cycle. So we have already our strategies to offset that the best way possible.
And the audience has already seen a QR code, also a VIP link down below. Where does that take them?
Oh, yes. So the QR code, guys, if you want to try out pay to trade, literally, I think right now is a really good time. Until October 15, we made a custom code for AltcoinDaily. All you need to do is download the app. You have the QR code. And then what you'll see is AltcoinDaily as your code. And then you'll have what we call the silver VIP rank for free, plus up to $50 of Borg tokens just for signing up, which takes, by the way, Austin, an average 2.2 minutes and 20 seconds, because it's very, very fast. It's all automated.
Oh,
But unfortunately, we're not available to US users. Really, really sorry. But all the rest of the world, most of the countries, we are. Sorry, Austin.
40% of our audience is in the US, 60% is global. So 6 out of 10
Wow.
people will be loving this.
Amazing, brother.
And
Amazing.
Alex, give me a summation, really of the altcoin season data that you shared before. In summation, after going through this whole presentation, thoughts for the crypto audience.
So, in summation, I would say that number one, guys, if this is not the ultimate cycle of your lifetime, which I believe it will be, and if it's not, it will be the next cycle. So I think there's always, you remember the tech cycles where we have growth and then maturity, and then eventually there will be something even better, right? Like Solana and maybe Ethereum will become irrelevant. There's better technology that will come and replace that. So I really think, Austin, number one, we have this cycle and maybe the next cycle are the last cycles where we really, really make that FU money. And I'm sorry to use it as FU money, but to become financially free, as in, you can support your children, your grandchildren, and hopefully, at least 2 generations to come. So that's number one. Don't miss this. Don't miss the boat. And watch AltcoinDaily all the time. AltcoinDaily, Coin Bureau, And the third is Digital Asset News, Rob, because he's a very close friend. Those are channels that I watch religiously. Raul Pal as well. Find a few channels and yeah, Altcoin Daily, keep watching that. And then I think another really important point is look at the fundamentals. If you're married to a token that just is not generating revenues, you may want to swap. And that, Austin, we're seeing that behavior. Some of the buy pressure and the change of behavioral economics within the Swissborg app, you can see people just giving up on a token that they're hodling for years that's not moving. So don't be afraid to get divorced of those tokens and focus on the fundamentals. DeFi is the sector. I think they're going to be renewed bubbles. Follow the renewed bubbles. If there are new bubbles like RoboFi or the energy sector coming to DeFi, all that stuff, enjoy it, but understand that bubbles, they will burst. I'm more confident in the renewed bubbles because usually that's showing that there's a real use case. And for taking your profits, which is something, Austin, that I've never done my entire life well, I would say follow total crypto market capitalization, follow Euphoria, and don't worry about all of the token dilution stuff or the P ratio bullshit or the stock market is going to blow off. There's going to be a blow off top and all that kind of stuff. I would study conviction so that this road or this ride is not as emotional as it should be. It shouldn't be taking bad energy on you. The more you dive deeper and the more you research, the less emotional you'll feel. And emotions, bad energy is not good for us, right, Austin? I hope
No
that's
way.
a good last note.
Do you is a Borg digital asset treasury company something you'd like to see?
Yeah, absolutely. Absolutely. That would be super cool. That would be super cool. I'm sure, maybe a Swiss company, we need to find a good B2B institutional sales guy, right? To find a DAT.
For sure.
A few of our investments did it, like Aether and a few guys, they did that recently. And yeah, that's super cool. But I really think, Austin, like if we can add like perps in the future, perpetuals, I really think that we won't even need a DATM. And already with the current model, let's try to get to $5 billion FDV. That'd be nice. In the previous cycle, we're at 2. And then in the future, then if you want to aim for the 50 billion FDV, like Hyperliquid, I think the only fundamental way is leverage trading. Yeah.
Alex, I want to have you back on in maybe 5, 6 months, revisit some of this data. But thank you so much, man, for sharing your time.
Thank you so much for bringing me on to, one of the greatest channels in the space, Austin. You and your brother have been a huge inspiration to my brother and I. And all I got to say is one love.
Dude, appreciate you. Appreciate you. That's the thumbnail.